Hello traders, the title of the video is Know the 8 specific things about the 5th Elliott wave. Alright, so you have been trading the 5th Elliott wave and you know a bit more about the 5th Elliott wave. Today I want to share with you, alright, 8 specific things one should know about the 5th Elliott wave. For that demonstration, we will use the Illumina Incorporation stock. It's a healthcare sector belonging to the healthcare sector, medical instrument and supply. The EP is ILMN, India Lima, Mike November. I'm on the monthly charts as always, and we want to talk about the 5th Elliott wave. So the 5th Elliott wave, alright, is the last wave of the trending phase. Alright, like the first and the third waves, the 5th wave can be extended, can be a complex wave that is subdivided into 5 minor waves. Alright, so when we are talking about the Elliott wave extension, apart from the third and the first wave, we can also have the 5th wave extension. If you want to know more about the 5th Elliott wave extensions, you need to go to www.24elliottwaves.com. Alright, so talking about the 8 specific things one should know about the 5th Elliott wave, the first thing that we need to know, apart from everything else that we know, alright, is that there is often equality between the first and the 5th Elliott wave. So which means the length and the magnitude of the first wave can be equal to the length or the magnitude of the 5th Elliott wave. So here you can see that if I draw a vertical line from the high of the first wave, okay, to the low of the first wave. So if I have my wave count here, 1, 2, 3, 4, 5. This is the 5th wave here in a triangle. All right. So our minimum target is to use the magnitude. So you can see that when I put it here, it's stopping here. That will be my minimum target. So hopefully you can see that line. So some traders say to me that they can't see what I'm showing, so I'm zooming into it a bit. All right, so there was a comment ladder, so I'm zooming into it. I hope you can see it clearly now. Okay, so when I measure, okay, this is the magnitude. You see this here, this is the magnitude of my first wave, and at the end of the 4th wave we can put it here to set the minimum target for our 5th wave. So we are using the magnitude of the first wave as a minimum target for the first wave. So you can see that trader did it here. How do I know? You see, if you put it there, so as the 4th wave, you see this one bounce up, people will set their target. You can see that the price did acknowledge that level. See the red line? So that's on the dot, you see. So price went above, breaks above that red line, retest it, again went up, retest it before it start going up. All right, so some traders were using this, the magnitude of the first wave as a target. All right. So if we're talking about the length, we will draw the line in the direction of the price, on the direction of the price in the first wave. This is about the length of the first wave. So then we will project it like this. At the beginning of the 5th wave, we put it like this. Again, it's stopping on the red line. All right. So the first thing that we need to know about the 5th Elliott wave, that very often one may see equality between the first and the 5th Elliott wave. All right. So it's all about forecasting the market. It's all about knowing where there will be a reversal. So trader will use the length and the magnitude of the first wave to set a minimum target for the 5th wave. Doesn't mean that the 5th wave will definitely stop there. As you can see, it continues to go above it. But traders are monitoring the reaction of the price in that area. Very important. Okay, that's the first thing. Second thing that we need to know about the fifth Elliott wave that a lot of Elliott wave traders do not know, I will share with you, is that one can forecast, okay, the end of the fifth wave by using the 61.8% Fibonacci, by using the magnitude of the 61.8% Fibonacci retracement of the price action from the beginning of the first wave to the end of the third Elliott wave. You all understand what I said now, isn't it? No. Okay, so what we are saying, so this is the beginning of the first wave and this is the end of the third wave. So what we need to do is to draw a vertical line, you see here, from the beginning of the first wave to the end of the third Elliott wave. Then we will apply Fibonacci retracement to that magnitude. Are you following me? Now you are following me now. Beginning of the first wave to the end of the third Elliott wave, we use Fibonacci retracement. So you can see that, okay, I put my line a little bit upside down. Oops, I'm moving a line. Okay, what's going on here? That's it, that's the way I want to put it. You get it now. So then we place Fibonacci retracement, okay, to highlight that magnitude from the low of the first wave to the high of the third wave. All right. Now what do we need to do? So you want to make sure that the beginning of for your Fibonacci have I done it? Because I have hold up please. Because I have too many lines. Hold on, please. That's it. Okay, now it's get better now. Okay, so you want to make sure that the 100%, that's what I prefer. Okay, now I'll put it upside down again. Stay with me, please. Stay with me, please. That's correct. All right, now it's good. You want to make sure that the 0% of your Fibonacci is at the beginning of the first wave. That's what I want you to do, okay? The 0% should be at the beginning of the first wave, and the 100% should be at the end of the third Elliott wave. And then what you need to do is to draw a line from the low of the first wave all the way to the 61.8% Fibonacci retracement. You see the 61.8% Fibonacci retracement level of the price action from the low of the first wave to the end of the third Elliott wave. That's the 61.8% Fibonacci retracement level. Then we draw a line from the low of the first wave to that 61.8% Fibonacci retracement level. I'm going to color that new measuring stick into pink. Can you see on the chart? So that's from the low of the first wave to the 61.8% Fibonacci retracement level of, okay, the price action from the low of the first wave to the end of the third Elliott wave. All right. And then we use that measuring stick and we place it at the beginning of the fifth wave to set a target. All right. Let me move this a little bit so you can see. To set a target for the end of the fifth wave. So you can see that trader apply that method here. And you can see that that's where the price did change direction. That's where the fifth Elliott wave has ended. Can you see that? Am I full? So you see here, this is the 61.8% Fibonacci retracement level of the price action from the beginning of the first wave to the end of the third Elliott wave. So we measure it from the low to the 61.8% level, and then we have that measuring stick ready, and then we place it as the fifth wave standard way to set a target for the fifth wave. So this is the second thing that one needs to know about the fifth Elliott wave. All right, let's move on. The third thing that one needs to know about the fifth Elliott wave is that the fifth Elliott wave, during the fifth Elliott wave, there is often a distribution or an accumulation. Now, if you are using Elliott wave, or if you are an investor or you are a position trader and you are not aware of this, you can wipe out your portfolio completely. You can wipe out, okay? You can lose a lot of money. During the fifth wave, there is either a distribution or accumulation. Now, the distribution will take place in an uptrend. So if we are in an uptrend and we are in a fifth area wave, know that during the fifth area wave, there is a distribution during the bullish fifth area wave. During the bearish fifth area wave, there is an accumulation taking place quietly. Why usually taking place? You understand about high frequency trader, it's all about speed. All right, so competition in the financial market is about the speed. Who gets in first, who gets out, okay, best. All right, so as the market know, first wave, okay, so the smart money bought it during during the consolidation and before we see the first wave, and they continue to buy during the third area wave. Now, as the fifth area wave is underway, they start coming out gently as they did at the beginning of the first wave, so accumulation and then breakout, okay, and then second wave and so on. So understand the process that is taking place so you don't get caught with that, all right? So very often, as I say to traders, that's the first wave, as I explained to you, is a breakout wave, all right? First wave, breakout wave. So before the breakout, we see consolidation or correction, complex correction. And if the fundamentals are solid and they are expecting that sector to be bullish, they will buy gently over time, all right? It's not in one day they buy everything gently, all right? So before we see the first wave springing out, good. Now, they do the opposite in an uptrend. So during the fifth wave, so they have been in the market for some time. They are very happy. They are celebrating with champagne and so on. And they are happy that, okay, now we are coming to the fifth wave. And again, they're not going to come out in one day. Sometimes they do, but we'll see a sharp correction, which means everybody's coming out at the same time. The price will drop down. So they don't like that. So during the fifth wave, they start selling gently, gently, gently. But the last comment, which is the public, the general public, he said that, oh, this stock is bullish, fundamental are solid, you should buy, but we are coming to the end of the journey, all right? You don't want to be the late comment. But during the fifth area wave, in an uptrend, there is a distribution taking place when the smart money starts selling the financial, not because they are bearish again, the financial instrument, they are taking their profit. It's a harvest time. So understand that. But in a downtrend, during the fifth bearish wave, there is an accumulation taking place. As they bought it at the beginning, okay, as they sold it at the beginning of the bearish trend. At the end of the bearish trend, they start accumulating. They start buying the financial instrument gradually over time. So understand that the third thing about the fifth area wave, that we may have distribution in an uptrend and accumulation in a downtrend. So you need to be aware of it. So if you are trading the fifth area wave, be very, very agile, okay, like a smart boxer, all right? Keep your eyes on your opponent and know exactly what's happening. Don't just switch off, all right, and forget and say, oh, yeah, everything is great, everything is great. All right, this is about the third thing about the fifth area wave. The fourth thing one should know about the fifth area wave is that it's quite easy to forecast the fifth area wave. So you should rejoice as an area wave trader, you should be able to forecast the fifth area wave. So in fact, there is a video at the 24 area wave YouTube channel about how to forecast the fifth area wave, and you will see a video there. So I'll share with you again just now how we use the 61.8% of the price action from the first to the end of the third wave, and also the equality between the first and the fifth wave. There are other ways one can forecast the fifth wave, and the fourth thing one should know about the fifth wave is quite easy to forecast the fifth area wave. All right, the fifth thing that one should know about the fifth area wave is that the fifth area wave is how should I put this to you? The fifth area wave expresses, should I say that, expresses the third internal, Okay, let me start again. The fifth Elliott wave expresses or reveals, all right, the structure. I will say this way: the fifth Elliott wave reveals the structure of the fifth internal wave of the first wave. All right, did you get it? Let me explain myself. Okay, so if the first wave is subdivided into 5 waves, all right. The first wave, you know that we can use the first wave to forecast the motive, yes or no. So what we are saying that is that okay, the 15 one should know about the fifth Elliott wave is that the fifth wave reveals the structure of the fifth minor wave of the first wave. So if this is the first wave from here to here, and this is the fifth wave, the fifth minor wave of the first wave, the real fifth wave will reveal the structure or will duplicate the structure of the fifth minor wave of the first wave. There are similarities between the real fifth wave and the fifth minor wave of the first wave. Okay, let's move on. The sixth thing one should know about the fifth Elliott wave is that it's a warning wave. So the fifth wave will give warning to the market. So this is a beautiful example, in fact, that I have here. I talked about this talk before. You can see my drawing on the chart. I talked about it before. And whenever you see here, this is a warning. You see, when a fifth wave is in a triangle like this, it's telling us what? Anything is possible. That's what I say to traders. You see a triangle, just say everything is possible. You can break above it, retest, continue to go up, or come down fast. But now you see here, there was a trend, 1, 2, 3, 4, 5 wave, and the fifth wave is a triangle. When I say to you that the sixth thing that one should know about the fifth Elliott wave is that it's a warning wave. It gives warning. The structure of the fifth wave will tell you how the correction is likely to be. I will not dwell on it today. I will give it to you as it is. Now, one example, as I will tell you now, is you see the triangle in the fifth Elliott wave. Be very, very careful because the correction may begin with a sharp correction or the price may run fast. So you can see here after it pop up on the triangle, you see how it run fast? Shoo, 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 like a train, you see? They just drop it down, pa, pa, pa. Alright? The triangle will tell you that this move may be sharp move down and the price may run fast. See? Rally up a bit to retest, down, and then again, down, you see? So the fifth Elliott wave is a warning wave, especially if you have, the fifth wave in a triangle, and you have this structure for the fifth wave, free, 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 free. So this is a strange impulse wave that is subdivided into 5, and each minor wave is subdivided into 3. Though this is an impulse wave, we are seeing free, free, free. This is giving us a warning that distribution is taking place. Distribution is taking place. 1, 2, 3, boom, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Now it's a warning wave, the fifth wave. So when you are in the fifth wave, look at the structure of the fifth wave, so you may have a bit of idea what is taking place. All right? That's the 6 things one should know about the fifth wave. All right? The 7th things that one should know about the fifth wave is that it's a target wave. Target wave. All right? So traders will set target in the fifth Elliott wave. So anything about targets, using chart pattern, using Elliott wave, as we are doing here, 61.8%, using the equality between the first and the fifth wave, know that during the fifth wave, professional Elliott wave traders set target, and the fifth wave will go to a specific target. So you want to know where are each target. Place them all on your chart as you are moving along, and know that the fifth wave is a target wave. The last thing, which is the 8th thing about the fifth Elliott wave, I will give it to you in 3. All right, so 3 things. As we say that the 7th thing about the fifth Elliott wave is a target wave, the last thing, which is the eighth thing one should know about the fifth Elliott wave, is that one should watch, okay, the 150% Fibonacci extension of the third Elliott wave, 161.8% Fibonacci extension of the third Elliott wave, and the 138.2% Fibonacci extension of the third wave. As I explained to you previously in the last part that the fifth Elliott wave is a target wave, the last thing that one should know about the fifth wave is to watch those three Fibonacci extensions relating to the third Elliott wave. So what, my friend? You want to become, you want to trade Elliott wave like a pro? All right, here we are. All right, so I want to show you now. All right, so because the fifth wave is a target wave, but the first wave is a breakout wave, you have to understand the structure or the characteristic of each wave. All right, so what usually takes place that you must know is that during the fifth Elliott wave, all right, professional will apply Fibonacci extension to the third Elliott wave. And they are watching which level? The 138.2%, the 150%, and the 161.8% Fibonacci extension level of the third Elliott wave. Look what's happening here. You see my 138.2% Fibonacci extension of the third wave. That's where the price did stop. Isn't it very interesting to know that? If it continues to go up more, what is the next level they will watch? They will watch the 150% Fibonacci extension of the third wave. If it continues to go up, the next level that they will watch is the 161.8% Fibonacci extension level of the third Elliott wave. So the last thing that one should know about the fifth Elliott wave is that one should remember to pay attention to the 150, 161.8, and 138.2% Fibonacci extension level of the third Elliott wave. Understand that myself, George, I use only exactly the 138% instead of the 138.2. So you can see that the 138 exactly is working beautifully than the 138.2%. No big difference though. But you can see stop exactly at 138. Is somebody in the market using my method? All right, this to make you laugh a bit, okay? So you see now? So those are the 8 specific things one should know about the fifth Elliott wave. All right. In the next few days, if I have time, I will be talking about what one should know about the second wave and also the fourth wave, because we already talked about the first wave, the third wave. Now I'm talking about the fifth wave, what one should know about the fifth Elliott wave. So to summarize this video, okay, this tutorial about the fifth Elliott wave, the first thing one should know very fast is equality between the first and the fifth wave. All right. Second thing, one can use the 61.8% Fibonacci retracement from the first to the end of the third Elliott wave to forecast the fifth Elliott wave. The third thing one should know about the fifth Elliott wave is that we may have a distribution in a bullish fifth wave and accumulation during the bearish fifth Elliott wave. The fourth thing one should know about the fifth Elliott wave is that it's quite easy to forecast the fifth Elliott wave. All right. So the fifth thing one should know about the fifth Elliott wave is that the fifth Elliott wave duplicates the structure of the fifth internal wave of the first wave. All right, very often, not always, but very often you'll see that. Okay. Now the sixth thing, about 6, 1, 2, 3. Yeah, the sixth thing one should know about the fifth Elliott wave is that it's a warning wave. Keep eyes and understand the message that the fifth wave is communicating to you, so you may be ready for the correction that may begin. All right. Okay. The seventh thing one should know about the fifth Elliott wave is a target wave. Traders are using all kinds of targets during the fifth Elliott wave, and you want to know what's going on, so you are not left alone. All right, when the correction begins, they know what's going on. So everybody want to control the last part. You play a computer game when you are playing in the last lap. All right, you want to catch up. So it's going on. Okay, it's a target wave. So the eighth thing one should know about the fifth Elliott wave, very, very important. Make sure you place Fibonacci extension on the third Elliott wave and monitor the price reaction at 150, 161.8, and 138.2% Fibonacci extension level of the third Elliott wave. All right. Do you have any question? Do you have any suggestion? Put in a comment section. In due course, I will be busy recording another video to answer your specific question. This is the end of the tutorial, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about know the 8 specific things about the 5th Elliott wave. Happy trading to you all, and speak to you soon.